Let's start with something we all do every day. We use banks, we deposit money, pay bills, swipe our debit cards, maybe even take out loans. But here's the thing, most of us never stop to ask, how do banks actually make money? It's simple. They take your money, lend it out to someone else, and charge them interest. But they pay you barely anything to keep your money sitting in their account. You deposit $1,000. The bank might give you 0.01% interest. They loan that same $1,000 to someone else at 7%, 12%, maybe even 25% on a credit card. In short, they profit off your money while you carry all the risk and very little reward. Now, multiply that by millions of people. You start to realize something. The banks have built a system that gives them total control while giving you just enough access to keep you dependent, and we've been conditioned to believe this is just how money works. But what if you could flip the script? What if you could build your own system that stores your money, grows your wealth, and lets you access it on your own terms without having to rely on traditional banks? That's where the infinite banking concept comes in. The infinite banking concept, or IBC for short, is a strategy that lets you take control of your financial life using a tool that most people misunderstand: whole life insurance. Now, before you scroll away, this is not about selling you insurance. We're talking about using a specially designed, dividend-paying whole life policy structured in a very specific way to act as your own personal banking system. Here's how it works in plain English. You fund a whole life policy with premiums, just like you would any insurance policy. But instead of focusing on the death benefit, these policies are custom-built to maximize something called cash value. That cash value is money you can access, and here's the key. It grows tax-deferred, earns a guaranteed interest rate, and if built with a mutual company, receives dividends from the insurance company as well. Think of it like this. It's a savings account on steroids, except instead of being controlled by a bank, it's controlled by you. And unlike a regular savings account, you don't have to withdraw your money to use it. You can borrow against it, using your cash value as collateral, and your account keeps growing as if the money never left. That means your dollars are doing two jobs at once. They're compounding interest and funding whatever you need, whether it's a car, investment, business, or even real estate. That's the foundation of infinite banking. It's not about insurance. It's about building a financial system that works for you 24/7 for the rest of your life. But here's the really important part. It only works if the policy is structured correctly. That means using a mutual life insurance company, designing the policy for maximum cash value, and minimizing the base death benefit in favor of a rider called paid-up additions, or PUAs. Don't worry, we'll break all that down in upcoming videos. For now, just know this. IBC is about building long-term control over your money, not chasing the next hot stock or putting your financial future in someone else's hands. So why do we call it becoming your own bank? Because when you use infinite banking the right way, you're mimicking what banks already do, but for your benefit. Think about how a bank operates. It receives deposits, it lends money out at interest, and it earns profits by cycling money through its system over and over again. With IBC, you become the banker. You make deposits into your policy. You borrow money when you need it, using your policy as collateral. You pay yourself back on your own schedule, and your system earns uninterrupted compound interest the whole time. In other words, you've created a closed-loop financial system where you keep control of the money and the interest. Let's say you want to buy a car. Most people go to a bank or dealership and take out a loan. They make payments with interest to someone else. But if you're your own bank, you borrow from your policy, buy the car, and then pay yourself back, recapturing the interest that would have gone to the bank. But what if I pay cash? Good question. Tell me this, the cash you spent on the car, how much interest does it make you once you purchase the car? None, that's right. But if you instead funnel that cash through your policy, take a loan against it, then use that money to purchase the car, now you have the car, and the money you deposited initially is building interest. And not just for 5 to 7 years, the length of most car loan agreements, but for the rest of your life. That's the power of IBC. And that's why the concept has been used by families, business owners, and investors who want freedom, not just returns. Now, is this a get-rich-quick scheme? Not at all. It's a long-term wealth-building strategy. It can take time to fund. It takes patience, but the rewards are huge. Liquidity, tax advantages, asset protection, and most importantly, control. Imagine knowing that you don't need to ask a bank for permission to use your money. Imagine your dollars working harder, not just sitting in a savings account losing value to inflation. That's what becoming your own bank really means. In the next section, we'll break down exactly how this works in more detail. The first step in infinite banking is setting up the right kind of whole life insurance policy. And this is where most people go wrong. Not all whole life policies are created equal. The kind we're talking about here isn't the kind most insurance agents sell. This is a specially designed, dividend-paying, high cash value whole life insurance policy from a mutual insurance company. Now, what does all that mean? Let's break it down. A mutual insurance company is one that's owned by its policyholders, not shareholders. That means when the company earns a profit, it can pay dividends to you, the policyholder. Second, the policy is designed with something called a paid-up additions rider, or PUA. This rider allows you to overfund your policy beyond the base premium, which accelerates the growth of your cash value, the part you can actually use. Think of it like a turbocharger. You're still getting the life insurance protection, but your real focus is building a large, accessible pool of capital inside the policy end. Here's where it gets strategic. You want your premium structure to be heavy on cash value and light on death benefit, not the other way around. That's the opposite of how most agents are trained to sell policies. But when infinite banking is the goal, the policy must be optimized for maximum liquidity, minimum cost. These are often called high early cash value, or banking-style policies. The goal isn't to wait 10 or 15 years before you can access your money. You want to start using that cash value as soon as possible, often within the first month or year. Once the right policy is set up, you've now created your personal financial warehouse. The next step, start filling it. Once your policy is set up, you start funding it consistently over time. Every premium payment you make increases both your death benefit and your cash value. And that cash value grows in 3 powerful ways. Guaranteed interest, the insurance company guarantees a base level of growth, no matter what's happening in the market, which means guaranteed returns and never any loss. Dividend. If the company performs well, you'll receive annual dividends, which you can use to increase your cash value even faster. Tax-deferred compounding. You don't pay taxes on this growth as long as the policy stays in force and is not overfunded beyond IRS limits. This limit is why it's important to work with an advisor who specializes in IBC, not just your average licensed broker or financial advisor, who may not even know these types of policies exist. Now, here's where it gets powerful. Instead of withdrawing money from your policy, which would interrupt compounding, you can borrow against it. The cash value serves as collateral for a policy loan from the insurance company. That loan doesn't come from your account. Your full cash value stays intact and continues growing as if untouched. The loan comes from the insurer's general account, and because it's backed by your cash value, there's no application, no credit check, no approval delay. You typically get the funds in a few days, sometimes faster. What's the interest rate? It varies by company, but here's the thing. You control the repayment schedule, and whether your repayments go to the interest or principal, you're in full control. There's no fixed term unless you want one. You can pay it back quickly, slowly, or not at all. And any unpaid balance will be deducted from your death benefit if you pass away, plus the interest. But the guaranteed compounding interest on your premiums will never fall below the interest charged. This is what makes it possible to build interest on everything you buy, by using policy loans to fund your budget after max funding your policy. But ideally, you treat it like any loan, pay it back, and recycle that capital for the next opportunity. An opportunity you won't be risking your own money on. You've now created liquidity on demand without ever interrupting the compounding of your savings. That's what separates infinite banking from a savings account or retirement fund. It's not just a place to store money, it's a place to move money. Your very own privatized bank and cash flow system that you benefit from instead of banks benefiting off of you. Now we get to the heart of infinite banking. Using your policy as your own personal bank, you've funded the policy. You've built cash value. Now you get to put that capital to work. Need a car? Borrow against your policy and pay cash at the dealership. Then, instead of making payments to a bank, you pay yourself back on your own terms. All while building interest on your policy loan instead of paying interest to someone else. Starting a business, same thing. Borrow the startup capital from your policy, grow your business, and repay the loan back into your system, all without risking your own capital. Want to invest in real estate? Use your policy loan as the down payment. The rent from the property can repay the loan, while your policy keeps compounding in the background. The opportunities are endless because the policy doesn't ask, "What are you using this for?" and it doesn't require permission. You're in full control. What makes this a banking system is that it's repeatable. You're creating a self-sustaining loop. Fund your policy. Build cash value, borrow against it. Put money to work, recapture profits, refill the system. Over time, you can use the same dollar multiple times, in multiple ways, a concept known as velocity of money. And here's another major benefit. Unlike a bank account or 401k, your policy is not directly tied to the stock market. That means it grows steadily. No crashes, no volatility, no emotional roller coaster. And if you structure your policy correctly, you can also benefit from tax-free loans, asset protection in many states, and non-reportable income in retirement. This system can become your go-to source for major purchases, investments, emergencies, and opportunities. Instead of draining savings or going into debt, you tap into a source of permanent liquid capital that you control. That's the real magic of infinite banking. It's not just about saving money or a death benefit. It's about controlling the flow of money through your life and benefiting off of every dollar that moves through your privatized banking system. In the next section, we'll talk about why most people have never heard of this and why financial institutions really don't want you to. So if the infinite banking concept is so powerful, why doesn't everyone know about it? Why isn't your financial advisor or your CPA shouting it from the rooftops? There are a few reasons, and they all come down to incentives and education. First, most financial professionals are trained by systems that don't include this concept at all. Financial advisors focus on mutual funds, 401ks, IRAs, and assets under management because that's how they get paid. Infinite banking doesn't generate recurring fees for Wall Street. And most insurance agents, they're trained to sell whole life policies the traditional way, maximize death benefit, minimize cash value. That structure earns them higher commissions but doesn't serve clients who want control and liquidity. The IBC approach flips that model. Instead of focusing on commissions, it focuses on your access to capital. Second, it's not a strategy you can explain in a quick elevator pitch. At first glance, people hear whole life insurance and immediately think it's expensive, outdated, or not useful unless you die. That's exactly what the mainstream narrative has conditioned us to believe. But here's the truth. Properly structured whole life insurance is one of the most underutilized financial tools available today. And it's been used by wealthy families, corporations, and even banks themselves for over 100 years. That's right, banks actually buy these same policies, often holding billions of dollars in what's called bank-owned life insurance, or BOLI for short. Why? Because they know how powerful it is as a safe, tax-advantaged asset. But they'd prefer you not know that. Because the more people who learn how to use IBC, the fewer people stay trapped in the debt cycle, handing interest to banks, and relying on retirement accounts they can't control. Infinite banking is about breaking loose from that system and building one that puts you in charge. Let's be blunt, Wall Street and big banks have zero interest in you becoming your own source of financing. Why? Because your dependence is their profit. Every time you swipe your credit card, pay off a car loan, carry a mortgage, or lock money into a 401k, you're putting money into their system, not yours. They profit from the interest on your debt, the fees on your investments, and the control over when and how you access your own money now. Compare that to infinite banking. With IBC, you build your own pool of capital, use that capital when and how you want, and recapture interest by paying yourself back. That means less interest for banks, less fees for Wall Street, and more control in your hands. It's no wonder they don't advertise this. Most financial institutions operate on velocity and leverage. And guess what? That's exactly what you can do with your own policy. Except now, you are the banker. You're moving money through your system, you're leveraging your capital, and you're keeping the profits in-house. Here's another truth most people don't realize. When the market crashes, insurance companies don't go down with it. Mutual life insurance companies operate under strict regulations, conservative investing practices, and have been paying dividends through every recession, every depression, and even during wartime. That's why banks use these policies to hedge their own risk. So the question is, if banks are doing it, if wealthy families are doing it, why not you? So now that you understand the concept, how do you get started with infinite banking? Step 1 is simple: education. You need to understand how this works in your specific financial situation. Your income, your debts, your goals, your timeline. This isn't one size fits all, but the basic formula looks like this. Work with an IBC-trained professional, not a traditional insurance agent or financial advisor. Although they have their place, work with someone who knows how to properly structure a high cash value policy. Design a policy that fits your life. You don't need to dump tens of thousands in upfront. As beneficial to your cash value growth as that may be, you can start with whatever amount fits your cash flow or budget and grow from there. Fund it consistently. The more disciplined you are, the faster your cash value grows. Borrow strategically. Start using policy loans for smart purchases, investments, consolidating high-interest debt, business expenses. Recapture and repeat. Treat your system with the same respect you would if you were borrowing from a bank. Pay yourself back, reuse, multiply. The beauty of IBC is that it's adaptable. Whether you're a 9-to-5 worker, an entrepreneur, a parent, or someone preparing for retirement, this concept can give you liquidity, control, and peace of mind. It's not about chasing returns. It's about creating certainty. Certainty that your money is accessible. Certainty that it's growing steadily. Certainty that you are in the driver's seat. And here's the best part. You're not just setting this up for yourself. You're creating a system that can benefit your children, your business, and your legacy. It's one of the few financial tools that truly lives up to the idea of generational wealth. Not just in dollars, but in structure, knowledge, and control. If you're ready to learn more, stick with this channel. We're going to keep breaking down infinite banking step by step in plain language, so you can make informed, confident decisions. This is Break Loose Financial, and it's time to take the banking function back into your own hands.